Have you wanted to buy a house but thought, you know what, I'm gonna wait till interest rates go down and the payment is more affordable? Well, stay tuned because we're gonna get into actual scenarios and calculations so that you have real data to make a decision. Hi, I'm Teresa Wellman with Homeowner Experience Real Estate. And if you've been on my channel before, you know that I have a technical background. I love to talk data and run through actual scenarios so that you and my clients can make informed decisions. Today, we're digging into several different scenarios. The first is you buy today at 6.5% interest rate and the average Santa Clara County home price of $1.75 million. Or you wait a year when rates drop to 5.75% and the market likely appreciates. We're gonna assume the historical average for Santa Clara County. Or scenario 3 is, you know what, you did decide to buy and then you're gonna refinance when the lower rate comes. And what do all those numbers look like? Where's the financial advantage or disadvantage? It's interesting, so stay tuned. And today we're discussing whether it makes sense to buy today at the current San Jose home values or wait a year when the rates are likely going to be lower and buy. We're going to compare the actual numbers and scenarios and give you some real nuggets that you should think about with that decision. Okay, so first scenario, looking at this first scenario, 6.5% interest rate at the average 1.75% price. That means your down payment is $350,000 with a loan amount of $1.4 million. That makes your payment $88.49 plus your property taxes and insurance, the full PITI, which stands for principal, interest, taxes, and insurance, is $10,872. Ouch. I know the average San Jose home price at the current interest rates is quite expensive and likely more than you're paying with rent. But hold on, because we're going to discuss that. And there's also another scenario of rent versus buy. And we're not going to get into that scenario in this video, though that is a great discussion that we will talk about in the future. So subscribe if you want to hear that information. Today, we're just focusing on, hey, you know you want to buy in the San Jose area and you're just deciding when is the right time to buy. So the estimated cash, because we're estimating about $15,000 in closing costs, would be $365,000 down payment to buy today with that purchase price, right? Okay, scenario 2, you wait a year, prices go up the historical average for Santa Clara County of 6.61%, which is very likely, and we're going to talk more about that at the end of the video. But if you saw my housing forecast, I definitely expect this to happen this year. So this is a very realistic number. And we're going to say in a year, rates are down to 5.75%, which again is also very realistic. The federal funds rate is likely to go down 3 times this year, about once a quarter, which will affect mortgage rates. And that is seeing a 3/4 point decrease, which again, very realistic. So I just want to let you know, we're looking at realistic scenarios here. That puts your purchase price with that appreciation up to $1.865 for the same house, just appreciated, right? With the 20% down payment means your down payment has gone up to $373 and your loan amount has gone up quite a bit to $1.492 million. We're going to look at those numbers side by side at the end. And then your payment is actually going to be a little bit cheaper, not a lot, but you are going to save a little bit of money, but your property taxes go up. And so it pretty much cancels out that savings. So your total payment is $10,850. Your cash to close is up to $388, which is more. And if we go back to this original payment was $10,872. So you're saving $22 a month by waiting a year, but you have a bigger loan and much more cash down. So waiting might not be the right scenario, right? Well, let's look at scenario number 3. Now, this is you buy today at the current prices with the higher interest rate, but then you have the opportunity to refinance when those rates get down to 5.75, like we discussed in scenario 2, right? So your estimated value will be up to $1.865, but your loan amount is actually lower. It was originally $1.4. It's down because you're paying your mortgage payment every month to $1.385. And you have a big chunk of equity already in your property, right? Your loan payment is going to be basically the same, and your property taxes are going to be less if you were to wait and buy a year because the price is lower, right? If you bought today. And that's going to save you money in your monthly payment from whether you buy it now or you buy it in a year. When you refinance, you're still saving money, right? So you still get that same reduced interest rate when you refinance, but the lower loan amount and the lower property taxes, which of course are a big deal. And now I'm not forgetting that you are paying a higher mortgage payment of PITI for 12 months, which is like an automatic savings account adding to that equity, right? Again, like I mentioned before, this is not a rent versus buy scenario video. That's a different discussion, but this is definitely like You want to buy and get in the market, and what does that look like? But don't dismiss rent yet, because we are going to hit on that here at the end. We're going to talk about all of this and roll it in together at the end. All right, so now we're putting these scenarios side by side. The first scenario is you buy now and you refinance versus wait a year and buy at that time, right? So there is an advantage we've already hinted on to buying now financially. So here's the purchase price right there. The biggest difference with that is that your taxes, your property taxes, are going to be $83 a month lower. Your down payment is going to be $23,000 lower, which is quite a chunk of change, right? Your loan amount is going to be $92,000 less, so a big chunk less of debt. And your equity gain is going to be $106,000 between the mortgage payments that you put in, as well as the appreciation that you see over that year. And your total payment after the refinance is going to be $703 a month cheaper. Yes, wow, that's a huge chunk of money every month for your cash flow. So the biggest difference is you've got that down payment is much lower. And something we didn't talk about is you're going to have the homeowner tax benefit for a whole year longer. And that's going to save you some on your taxes as well, your income taxes, not your property taxes, but your income taxes. So that's another bonus appreciation or thing that's pretty great to know. So it's pretty clear there is an advantage to buy now versus waiting and refining when those rates do get to that improved number, right? So just the down payment cash savings of $23,000 plus the equity gain that you're going to get in the year totals $129,000 of equity gain in a year. If you do that, divide that by 12, that works out to $10,775 a month of equity gain, which is for sure less than the rent that you're paying. I pretty strongly believe that that's going to be less than your rent. So even without the rent versus buy comparison, those numbers are putting money in your pocket. So with all of this information, it's pretty clear, I think, that you should consider buying now versus waiting. Now, what are the risks that we want to talk about in regards to this calculation? If you wait, prices, we talked about going up 6.6%, which is the historical average for Santa Clara County. Now, there is a risk with the extremely low inventory and the improvement in interest rates with the increased demand that number is actually going to be higher this year. There are plenty of years, we've only had 3 December, Januaries with this low of inventory, and those springs, the numbers really took off, more than 6% appreciation. So if the market does appreciate more than that historical average, it's even more reason for you to buy now. Now, the other thing is to look at what if interest rates do improve differently than what we talked about. If you already own the home and you need to refinance, maybe the time it takes to refinance is 9 months, maybe it's 15 months to get to that 5.75%. But if you're purchasing, that means you're renting longer and there's other numbers that are working not in your favor. So the bottom line here is that if you'd like to run this calculation on your custom scenario, not everyone can buy the average single family home, or maybe you're buying in Almaden Valley, which is a $2 million price point, then I know just the lender partner you should talk with. You really should talk with somebody who is local here in San Jose and understands the market dynamics. Or if you'd like to have a rent versus buy comparison, that is definitely something to look into as well and understand when you're going to see an advantage to buying versus renting, that payoff time. There's some really cool tools that I've seen my lender partners use, and I would love for you to have that information in your hands to make a decision moving forward as well. Again, I'm Teresa Wellman with Homeowner Experience Real Estate, and I love talking this data and using real data for you to make decisions. So thank you for joining me. I hope you found this information useful. Please comment, like, and subscribe, and I look forward to connecting with you soon.